All right, crypto adventurers, buckle up. The market is moving at warp speed, and you absolutely need to be in the know. We've got breaking news that could reshape your entire strategy. Get ready for an information blitz that's hotter than a freshly mined block. Bitcoin Bulletin is on the air, and we're diving deep into the stories that matter right now. Don't miss a second of this because the landscape is shifting, and we're here to break it all down for you. Let's get into it. First up, we're talking about a massive strategic play that's sending shockwaves through the financial world. Imagine a $5 billion initiative designed to supercharge a major digital asset. This isn't just a ripple, it's a tidal wave of capital poised to make serious waves. We'll unpack exactly what this means for the market and for investors looking to capitalize on the next big move. Then, we're shifting gears to analyze the subtle signs that indicate a significant shift in market sentiment. Are we seeing the early whispers of a major trend reversal? We'll dive into the on-chain data and expert analysis that suggests a key indicator might be flashing a surprisingly strong signal for a major digital currency. Get ready to decode the hidden messages within the blockchain. Next, prepare for a forecast that's turning heads and sparking serious debate. Could a familiar seasonal pattern be setting the stage for an explosive year-end rally? We're looking at historical data and expert predictions that point towards a monumental price surge, potentially reaching figures that sound almost unbelievable. Could this be the year the market experiences a Christmas miracle? And finally, we're tracking the steady, strategic accumulation by major players, revealing how key companies are bolstering their reserves. We'll look at the latest corporate treasury moves that demonstrate a clear commitment to a specific digital asset, showing a growing confidence in its long-term potential. This is the kind of smart money movement you need to understand to stay ahead of the curve. Stick around, hit that subscribe button, and ring that notification bell so you don't miss a single update. Let's go. A $5 billion capital injection is coming. In a move that's sending ripples across the financial landscape, Nakamoto, a prominent venture firm, has announced an ambitious $5 billion at-the-market program. This significant capital initiative is primarily earmarked for the acquisition of more Bitcoin, alongside funding for working capital and potential business, asset, or technology acquisitions. The company, which recently finalized its merger with KindlyMD and made its first public Bitcoin purchase, now holds a substantial 5,744 Bitcoin in its treasury. This strategic maneuver, facilitated through a shelf offering filed with the SEC, involves a consortium of leading financial institutions, including TD Securities, Cantor, B. Riley Securities, Benchmark, Canaccord Genuity, Cohen and Company Capital Markets, Craig-Hallum, Needham and Company, and Yorkville Securities. David Bailey, the driving force behind Nakamoto and a notable crypto advisor to Donald Trump, expressed his enthusiasm on X, stating, "Excited to partner with TD Securities and 9 other leading financial institutions to execute a 5B ATM offering. It'll take us a while to build the necessary liquidity to complete the program, but it'll be a critical tool as we execute our strategy." This influx of capital and strategic buying plan from Nakamoto comes at a time when the price of Bitcoin has shown considerable strength, recently breaking past the $112,000 mark. The company's stock, however, experienced a notable decline of over 24% in early trading following the announcement, indicating investor digestion of the news and its potential implications. This development also occurs in parallel with similar strategic moves from other major players in the digital asset space. Metaplanet, another Bitcoin-focused treasury company, announced its intention to raise up to 130.3 billion yen, approximately $880 million, through an international offering of new shares, with the majority of the proceeds designated for Bitcoin purchases. Despite a recent 30% dip in the past month, Metaplanet's shares have seen an impressive 155% surge year-to-date, highlighting the dynamic nature of the market. The CEOs of both Nakamoto and Metaplanet were notably present together at the Bitcoin Asia conference in Hong Kong, suggesting a collaborative or at least synchronized approach within the industry. Beyond these large-scale treasury strategies, other entities are also steadily increasing their Bitcoin holdings. DDC Enterprise, a global Asian food platform, made its fifth purchase this month, acquiring an additional 102 Bitcoin to bring its total holdings to 1,008. Similarly, Swedish firm H100 Group acquired 46.2 Bitcoin, raising its total to 957.5 Bitcoin. These consistent, albeit smaller, acquisitions by various companies underscore a broader trend of corporate treasury diversification into digital assets. The market is keenly watching how these significant capital allocations will impact Bitcoin's price trajectory and institutional adoption. But what does this massive capital injection mean for the average investor? We'll break down the potential impacts and look at other major market movements. Late bull phase signal detected. On-chain analytics are painting a picture of Bitcoin potentially entering a late bull phase, marked by significant profit-taking by long-term holders, LTHs. According to data from Glassnode, LTHs have realized 3.27 million BTC in profits this cycle, a figure that rivals the 3.93 million BTC sold during the 2017 cycle and surpasses the 2021 bull run. This substantial profit-taking suggests increased selling pressure as holders aim to lock in gains, a common characteristic of the latter stages of a bull market. The increased liquidity and activation of dormant coins have also contributed to a notable surge in available supply. Approximately 100,000 BTC has recently become available for sale, partly due to the reactivation of older, OG, coins and listings on major platforms. This influx of supply, coupled with broader trading volumes facilitated by ETFs, has contributed to a slight price correction, though it also underscores the market's depth and capacity to absorb selling pressure. Bitcoin experienced a pullback from its recent highs, briefly dipping below $110,000, its lowest point since mid-July, following a peak above $124,000. Analysts attribute this correction to a combination of profit-taking, technical resistance, and shifting macroeconomic sentiment, particularly as the positive impact of Federal Reserve Chair Jerome Powell's comments at the Jackson Hole Symposium began to fade. On-chain indicators further support the notion of a market in consolidation. The adjusted MVRV ratio has settled at a neutral level of 1, indicating that short-term profit-taking has subsided without necessarily signaling a reversal of the broader uptrend. The Bitcoin index market phase metric places the market in phase 4, characterized as a late bull stage, with a 90-day return of only 5%, suggesting a pause for market digestion after a rapid ascent. Meanwhile, Ethereum has also seen a correction, dropping from its all-time high to around $4,400, with significant liquidations occurring amid macroeconomic uncertainty. While Ethereum ETFs have attracted substantial institutional inflows, indicating a potential shift in risk appetite towards altcoins, Bitcoin has demonstrated resilience, remaining up 76% year-to-date and maintaining its market dominance. This resilience is linked to expectations of potential Federal Reserve rate cuts and continued institutional adoption, although geopolitical and macroeconomic factors are expected to remain key drivers of near-term price movements. Could these on-chain signals be a precursor to a dramatic year-end rally? We're exploring the historical patterns that suggest just that, and the price targets are staggering. The Christmas comeback prediction, $160 K target. Despite current market fluctuations, a compelling case is being made for a significant Bitcoin rally heading into the year's end. Analysts are pointing to historical patterns that consistently show Bitcoin experiencing a strong resurgence in the final quarter, a trend that could propel its price towards an astonishing $160,000 by Christmas. This optimistic outlook is rooted in detailed research that suggests potential gains exceeding 40% in the lead-up to the holidays. The historical data reveals a distinct seasonal anomaly. While September has historically been a challenging month for Bitcoin, often resulting in flat or declining prices, the fourth quarter has frequently been a period of substantial growth. This pattern provides long-term holders with a strong incentive to maintain their positions, anticipating a reversal of fortune as the year concludes. Network economist Timothy Peterson's analysis highlights that in approximately 70% of past market cycles, Bitcoin has experienced robust growth in the 4 months preceding the holiday season, averaging a remarkable 44% return. This average gain aligns precisely with the ambitious $160,000 price target. Peterson acknowledges that not every cycle perfectly mirrors this trend, citing exceptions like 2018 and 2022, which were influenced by unique economic pressures. However, he posits that the current market conditions in 2025 bear a closer resemblance to Bitcoin's stronger historical years, thereby increasing the probability of a significant upward movement. Market participants are drawing parallels between the current market action and the classic 2017 bull run. One prominent trader, known as Donnie, has observed that Bitcoin's recent price action appears to be front-running the typical September slump, experiencing an earlier dip that could be a precursor to a larger rally. Furthermore, Donnie points to Bitcoin's historical tendency to mirror gold's performance after periods of lag. Given gold's steady performance this year, if this correlation holds, Bitcoin could soon catch up, providing further impetus for bullish sentiment. For investors, the prevailing sentiment is a balance between patience and risk assessment. A decisive break above key resistance levels in the coming weeks would lend significant credibility to the $160,000 Christmas target. Conversely, failure to maintain crucial support levels could signal a more challenging path ahead. As of the latest reports, Bitcoin is trading around the $111,589 mark, positioning it at a critical juncture where these historical patterns and technical indicators will be closely watched. Beyond the bullish forecasts, what are the major companies doing to position themselves? We're looking at the steady accumulation strategies of key players that signal a growing institutional confidence in digital assets. Corporate treasuries bolster digital asset holdings. In a clear signal of growing institutional confidence, several prominent companies are actively expanding their digital asset reserves, with a particular focus on Bitcoin. These strategic accumulation efforts underscore a long-term commitment to diversifying corporate treasuries and hedging against traditional financial volatilities. Nakamoto, a venture firm led by Trump crypto advisor David Bailey, recently filed a $5 billion at-the-market program with the SEC. This initiative is primarily aimed at acquiring more Bitcoin, alongside bolstering working capital and exploring potential acquisitions. The company, which recently completed its merger with KindlyMD, has already made its first Bitcoin purchase as a public entity, bringing its total holdings to 5,744 Bitcoin. Bailey expressed optimism about the program, noting its importance as a tool for executing their strategy, and highlighted partnerships with major financial institutions like TD Securities. This trend is mirrored by Metaplanet, which announced plans to raise up to 130.3 billion yen, approximately $880 million, through an international offering of new shares. The bulk of these proceeds are designated for further Bitcoin acquisitions. Despite a recent price correction, Metaplanet has seen significant year-to-date gains, demonstrating the market's appetite for companies with clear digital asset treasury strategies. On a smaller but consistent scale, DDC Enterprise, a global Asian food platform, continues its steady accumulation by acquiring an additional 102 Bitcoin in its fifth purchase this month, increasing its total holdings to 1,008 Bitcoin. Similarly, the Swedish company H100 Group acquired 46.2 Bitcoin, bringing its total holdings to 957.5 Bitcoin. These regular acquisitions by diverse corporate entities illustrate a widespread, methodical approach to building significant digital asset reserves. These corporate treasury moves are occurring against a backdrop of broader market activity. Bitcoin miners like Hut 8 are expanding their operational capacity with plans for new sites across the U.S., aiming for over 1.5 gigawatts of total capacity. This expansion is partly driven by a strategy to potentially carve out and go public with nearly all its Bitcoin mining assets through a subsidiary, a move expected to re-rate Hut shares and potentially lower the cost of capital for its energy infrastructure ventures. Benchmark analysts have reiterated a buy rating and raised their price target for HUD-8, reflecting confidence in the company's strategic direction. Meanwhile, in the Ethereum ecosystem, SharpLink Gaming, which holds the second-largest Ethereum treasury, recently updated on its stockpile and capital raise. The firm acquired 56,533 Ethereum tokens at an average price of $4,462, increasing its total holdings to 797,704 tokens, valued at approximately $3.7 billion. The company also raised $360.9 million in net proceeds and has $200 million in undeployed cash, alongside an approved $1.5 billion stock buyback program. The positive inflows into spot Ethereum ETFs in the U.S., with BlackRock's ETF leading the pack, further indicate strong institutional interest and capital deployment within the digital asset space. These corporate strategies are setting the stage for significant market movements. Join us after the break as we recap the biggest stories and look ahead to what's next in the fast-paced world of crypto. And that's a wrap on today's essential updates. We saw Nakamoto launch a massive $5 billion ATM program to boost its Bitcoin holdings, signaling major institutional capital inflow. Then, on-chain data suggests Bitcoin might be entering a late bull phase with significant profit-taking. We also explored the prediction of a potential $160,000 Bitcoin surge by Christmas, driven by historical seasonal patterns. Finally, we highlighted how companies like Metaplanet and DDC Enterprise are steadily increasing their Bitcoin reserves, showing continued corporate confidence. Don't miss out on any future updates. Like this video, subscribe to Bitcoin Bulletin, and hit that notification bell so you're always the first to know. Follow us on all social platforms for more insights and join the conversation in the comments below. See you next time.